Good morning, everyone, and welcome to the Trade Talk podcast. On the day of monthly expiry, indices fallen sharply from their highs, Nifty closing 1.1% lower, and the Sensex was down over 600 points. But before we start to the setup of our markets, let's go through with global markets because after a long time, global macros have started cooling off. It may be too early to say, but multiple things have taken a pause or shifted the prevailing trend. US bonds have corrected from their recent highs. The dollar index fell against every G10 peer. Crude cooled off of the highs, and Japan's inflation slowed for a third straight month in September. US equities completed first leg of the most extended corrective pattern at 33,300 and we saw some pullback. I believe it could be a matter of time before we can expect a sizable upward pullback in our markets. For our markets, on Thursday, it was 19,750 was the resistance level. From there all the way we saw vertical decline in the market, and the market failed to sustain above the levels of 19,550, which has triggered furthermore weakness during the day, and we saw the levels of 19,490. As per the pattern of the market has formed a completely bearish bar reversal formation, and on the basis of that we can expect some weakness. There is a possibility that we may see the levels of 19,400, 430 in today's date. But in case if we see the market is closing below the levels of 19,400, then in next few days we may even see the levels of 19,250, 200, where the market is having support of the previous lowest level, as well as it's a support of 100-day simple moving average. So now the next proper and bigger level is around 19,200, 250. In between we may see some reversal because it's a corrective pattern, and corrective pattern always ends slightly above the highest of the previous low. For the Bank Nifty, there also we saw good amount of correction. 44,300 was the closing, 44,100 is the next support level. Below that we can expect weakness up to 43,800. Fresh buying is advisable only if it crosses 44,750, otherwise it will remain under selling pressure. For the Nifty IT index, there was a big cut and it was down heavily. Below 32,400 it collapsed to 31,800, and now the next support level for the Nifty IT index is only in the region of 31,400, where it has support of 50 days simple moving average. So broadly we are of the view that yes, there is a possibility that we may see some correction in the near term in today's date, but after hitting those levels we are expecting again a rebound in the market. For the Nifty, on the higher side now 19,600, 650 going to act as major resistance, and till the Nifty is not crossing 19,650, we are going to see range bound activity with a bearish bias. But yes, if there is a medium to long term view, then in the recent decline we should look for adding good companies to our positional portfolio. For the stocks like Reliance Industries or HDFC Bank, where there is consistent selling in the market, we are of the view that Reliance closed below the levels of 2350, and now the next level to watch out for would be 2300, and in the worst case scenario 2250, where the Reliance is having excellent support. For the HDFC Bank, there also the closing was not that great. It was down, it was around 1525. It is closing multiple below the important levels of 1530, which could trigger furthermore weakness up to 1500. And apart from that, if we go through with some other PSU banks, then in that State Bank was down, but it was down nominally. it is still quoting around 590, 595, where it has a support of 20 days as well as 50 days and 100 days simple moving average. So if there is any recovery in the market, then that we are expecting out of PSU banks, as well as we need support of large cap companies like HDFC Bank and Reliance Industries. Till then, range bound activity with bearish biasness is not ruled out. That's all from my side for the day. With this, I'm ending today's call. Thank you. Have a great day to all of you.